Hey everybody, I'm Blank, and this is my first video. And what better first video to make than a very beginner-friendly tool to use when you're first starting out trading called the Heiken Ashi candlesticks. So these candlesticks actually make it a lot easier to identify trends, and it also makes it a little bit easier to identify reversals as well. So let's go in here and let me show you a regular candle. There you go. As opposed to your Heiken Ashi candles, which, as you can see here, there's a lot more going on with the traditional Japanese candles than what we were looking at first with the Heiken Ashi candles. Make those go away. Boom. And how we're going to use these is we're looking for entry on a heavy bullish or bearish candle. What is considered a heavy bullish or bearish candle in a Heiken Ashi candle? Well, for a bullish candle, you're going to be looking for a candle that has, where the fuck is my drawing tool? There it is. That has no bottom wick. Okay, and the trend keeps going. No bottom wick. This one has nope, no bottom wick, no bottom wick, no bottom wick, and then finally we slowed down and we consolidated, and then we started to break down. Bearish is the same way. No top wick, no top wick, no top wick, no top wick. Okay, so what you can do is you can actually go in and say, market's going up, I'm looking for a reversal, and once you start seeing some consolidation, and then you see your first bearish candle like this with no top wick, that's when you say, and that candle closes, you say, okay, I want to enter a short position. So then you enter and set your stops, and whatever happens happens. So let me give you an example of how this plays out. Replay mode is going to be obviously different than real time, because you're watching the market real time. This is basically just going to skip around and give you the cliff notes of everything. But here we've got, well, we start out, there's a bullish candle. So let's look for, what are we right now? So we are kind of, we're kind of in the middle. So let's just play this by ear. So let's look for slowing momentum. Okay, so we got a bearish candle right here. We're going to take a short position. I'm going to put my stop loss up here, the most previous high, highest point, and I'm going to go 2 times the risk. See what happens. Okay, so another thing too, once you start seeing the trends start to change against your desired direction, don't be afraid to take profits. I mean, don't let your play go red. We already hit, there's one-to-one risk to reward. If you're more than 50% right, then you're going to be profitable if you're taking one-to-one risk to reward. Okay, and then boom, it hit our profit target. Congratulations, we won. So let's see if we can find an entry on. Okay, so here we go. Slow down. We got some doji candles, and then we're going to hit buy, stop loss down here, target 2 times the risk. And I didn't like that candle. Might lose. We're still going. I'll be honest, I'll probably have wanted to get out right there because I'm a big wuss. Yeah, and just kind of play it by ear, and just see where it goes. And we ended up hitting our take profit. So ideally what you're looking for is you're looking for momentum to stop, and you're looking for consolidation candles, these doji candles, or like an inside bar. An inside bar candle is where the new candle did not break the previous candle's high or low. It's in the middle. And then you'll start seeing like doji candles, and then boom, you start seeing bearish candles. That's when you'd say, hey, maybe I'll enter short. then you enter short, target 2 times the risk, and boom, we got stopped out. But that's okay. Losing is part of the game. There's not going to be a single strategy out there that is going to give you a 100% win rate. You may win 100 times in a row, you may lose 100 times in a row, but it's all about managing your risk. Okay, this isn't even a full strategy. This is good when you're first learning, trying to learn price action, how the market moves. You want to still be marking out your highs and your lows, things like that, things that everybody else preaches about. You want to be looking at points of interest. Where has the market done business at previously that you might get a reaction, or you start to see these candles start changing into these doji candles like this, these indecision candles, whenever it starts getting close to an area. Ironically, I don't know if you can see this, but we started getting this once we pulled back and we started scooping back up in these areas here. We started getting a little bit of consolidation, which tells us that the market is hesitating at this area to make a move, either to continue up or continue down. Okay, now again, this isn't a full strategy. This is just a tool to use. um, I used to like to play with Heiken Ashi candlesticks when playing options. So I like to use MACD indicator with them to kind of use this confluence. You can just look down here and use volume divergence as well, which go over that in another video one day. You can use a momentum based indicator like RSI, the relative strength index. It actually works really well with the Ichimoku cloud. I know nobody really talks about Ichimoku cloud. Let's actually pull that up and I can kind of explain that a little bit. Get my lagging span and stuff like that out of there. And basically, not to confuse anybody, but the Ichimoku cloud is basically another trend-based indicator. It's a lagging indicator, just like moving averages are, RSI, anything else. Indicators are lagging. They use this past data. It's not now like price action is, but you'd basically use Ichimoku as like a dynamic support and resistance, and you're never entering a trade inside of the cloud right here. So the cloud is green, it means we're in a uptrend. Cloud is red, we are in a confirmed downtrend. So here you'd say, all right, well, we broke above it. I'm going to look and see if we use the cloud as support. And using another indicator as confluence, okay, inside bar right here. Using this as confluence, you're going to enter a lot less trades, which is good because it's less risk exposure. Set my stop down here because if it breaks through the cloud, we're bearish. Take profit is way up here, 2 times the risk. And let's see what happens. Wow. And we hit our take profit. So again, guys, this is just my first video. I want to make it very beginner friendly. I wanted to make something that people can take away from this video, learn something new, maybe. Um, if you don't have many friends to trade with or need a community to trade with, down below I have a link to a free Discord that revolves around options and futures. I love it there. Consider it my home Discord. It's free to join. They do have a premium section, but there's no pressure to join. We're not here to sell you anything. We're here for educational content to help with your journey on learning to trade. Get your foot in the door and learn good practices. Learn your way around these indicators. Learn price action and other strategies that might help you succeed in the future. But if you need a good community to join, the link's down at the bottom. Don't forget to hit the like button, subscribe, all that nonsense. And thanks for watching. Have a great day.